All right. Hello, everybody, and welcome to this week's edition of Self-Wealth Live, the technical analysis edition. We're here today and joined by, as always, the master in trading and technical analysis, and it's Jason McIntosh. How are you today, Jason?
Hey, Rog, I'm good. Looking forward to another show. I think we've got a few things of interest to talk about today in the markets. Of course, I'm sure we've got plenty of interesting stocks to look at from the viewers.
Yeah, for sure, 100%. My name is Roger. I'm from Self Wealth by Syfe. It's exciting once again to be. Hello, everybody on the chat on the other side of the line. Once again, we're going up again. The markets are going up, so it's always good to be on these shows when the market's running hot, right? So hopefully we can. Hopefully we can analyse some great stocks coming out of all this as well in the show. But before we do that, we do run through the three major markets that we offer at Self Wealth, which is Australian market, the US market, and the Hong Kong market. Obviously, we're looking at it from a price point of view, technical analysis point of view. We don't really go through fundamentals because that's what this show is all about, targeting how to read a price chart effectively. And then we've got a viewer question as well, which we'll try and answer. And then it's up to you guys to provide us your tickers, and let's get through some and hopefully find some good stocks in there to pick out. And even if we find some ones that are not so good, it's great learning, right, as we go. So, all right, Jace, before we go ahead, let's have a look at our disclaimer, please.
Yeah, so quick note that everything we do today is general commentary only, no personal advice here. And I'll quickly put on that disclaimer that we do each week. And also noting that I'm not part of Syfe or Self Wealth, I'm Motion Trader. So my details are up the top with licensing and all of that. And beneath there, we've got the Self Wealth disclaimer going through the same important information, licensing, general commentary, all of that is in there.
All right, fantastic. Thanks, Jace. Now, the Australian market had a big push up, almost nudging all-time highs. Let's start off with that. Let's
go over to our charts. And the first one is the ASX 200. And, nudging towards new all-time highs now, but it all is still part of a range-bound trading period. The last week has been, ASX 200 has been in a range. Actually, it's just finished its second week, so we're moving into the third week of sideways trading. And that's really a consolidation following this strong rally we had in mid-July. I think an important level to keep an eye on at the moment is around just back down here at the bottom of the range, at around 8,630. I just sketched that in on the chart. And what that does, it takes in the February high, also got the June high, and it's been supporting the market during the last 3 weeks. And it's also the breakout point where prices broke higher in mid-July. Now, there was a test of this support last Friday, and also the Friday before that, for that matter. And on both occasions, there's been a strong rally back towards all-time highs, but not quite getting to an all-time high just yet. I think a bullish scenario here would be for prices holding above this support, and maybe prices could break to new highs in the next day or two, or they could just pull back and continue to track sideways for a bit longer, maybe another week or a couple of weeks, or some longer period. But what I think that would potentially do would potentially set up a platform at this new higher level from which prices can then move higher from. I think if we and this was an important thing on Friday, prices started to break below there, but they rallied through the day, closed around that support. If this support was to break, well, I think that would then open a window for a retest of the 50-day moving average and potentially the 100-day moving average. But at this stage, I'd favour the bullish scenario, that prices are at some point in the near term moving higher, and that's because until we get a break of this support, my bias goes with the incumbent trend. And as we know, the incumbent trend is very much to the upside. Interesting to have a quick look at the equal weight, so the ASX 200 on an equal weighted basis. And I like the price action that we're seeing with the equal weight, I've been impressed with how well it's been holding on to its recent gains. So you can see the strong rally off the from the first half of July, strong rally into the high, and then it was just a shallow pullback before a good rally today. And as we often discuss with shallow pullbacks are often a sign of buying interest. So I think that's an encouraging sign. The other important point is that healthy bull markets tend to be broad-based. So I think that a strong equal weight index, a strong ASX 200 equal weight, it's a good sign for the market generally. And that's because you've got that broad participation. Just looking at the structure that we have on the chart here, both the 50 and the 100-day moving averages, they're both trending upwards. Price is above those upward trending moving averages. So that's, Rog, that's the definition of a bullish trend. And I think we should be positioned accordingly and going with this upward trend. That's what we've been talking about over the last probably 2 months now. Been talking about like giving this upward trend the benefit of the doubt and letting it run, see where it goes. And so far that's been taking things higher.
Yeah, I mean, look, one of the things that just you said there just resonates with me, and I just want to repeat it, and it's sort of goes off what we spoke about last week. It's the saying of, you know, I'm not going to say it perfectly like you said, Jace, but, you know, I don't know where the market's going to go, but, you know, I know what I'm going to do wherever it goes, right? But what you just said then is it's you know, until I see a break of support, which is my bias is going to be with incumbent trend, right? Now, that's a pretty clear view of the market versus having not really any clue at all, right? So, you know, a lot of people would have fear up at these levels, whereas we're sort of not having that fear and just knowing, you know, our bias is towards that upwards trend because there's no break of support. So it's very clear at this point in terms of the way we view the market. So it was a good little saying, a good little line that you had there. Sorry. All right. Well, obviously that's looking good. Let's have a look at the US markets then.
And okay, so coming across for the S&P 500, and so we had another all-time high in the S&P 500 and the Nasdaq last week before we saw this reversal on Thursday and a pullback on Friday. I think it's too early to read too much into this pullback at this point. At this point, I'd be saying it's I'd be looking at this as just being market noise, and we get the pullbacks and back and forth within uptrends. That's nothing unusual. While a down day can make the headlines, and there was a bit of chatter about this down day on Friday, I think it's important not to let day-to-day price swings distract us from what really matters. And for me, that's the overall structure of the price action. And when we look at all this from a structural perspective, the S&P 500, it remains in a bullish trend. So again, we've got those rising moving averages. The 50-day and the 100-day moving averages continue to trend higher. And we've also got this clear sequence of rising lows, rising highs. I think that's more important than focusing on a down day. It's don't get distracted by the noise. Stay on target. Stay with that bigger picture trend until you have evidence to the contrary. I think there's certainly scope for consolidation. There's no doubt about that. There has been a big rally from the April lows. So consolidations are always possible after big advances. One scenario is prices could trade sideways for several weeks. We talked about the potential for the ASX 200 to maybe even have some sideways consolidation, and staying in that range has been in over the last few weeks. So some sideways consolidation is possible. We could also see a retest of the 50-day moving average. But both of those possibilities, I think, are consistent with the sort of price action we often see within a bullish trend. And you'll see it during just about every period where prices are trending upwards. You get these pullbacks and consolidations along the way. Just look back to last year. strong rallies, and you get the pullbacks to moving averages, and then you get sideways period where it just consolidates around the moving averages before breaking higher. So the market moves higher in its own time. Whether it continues moving higher in the near term or we get some consolidation, or of course we could get a breakdown. Although I think that's a lower odds scenario at this point. I think the play remains the same. This at this stage is an upward trend. Having a look at the equal weight, S&P 500 on equal weight basis. Now, this is the opposite situation to what we've seen in the ASX 200 equal weight. So here it's been the ASX 200 equal weight has been outperforming the ASX 200 in recent times. But what we have here is the equal weight is not performing as well as the S&P 500. And what we had a new recovery high about a week ago, and then we've had this bigger pullback to the 50-day moving average just in the last few days. So it's really the big caps like Nvidia and Meta, which hit new all-time highs last week, which are doing much of the work. That said, this is still bullish structure. Again, the possibility of more consolidation below these highs is certainly open, but the key signs still point to an ongoing bullish trend. And with those rising moving averages, rising and generally rising lows, just coming back to the S&P 500, I continue to believe the play here. It's staying long something that's working, and yes, a consolidation is possible. It's been a big advance in a short time, but there's nothing here that suggests to me that the bullish phase is ending. I want to stay invested until I've got good reason to do otherwise, and I don't see that good reason at this point.
Okay, great. And if someone was to look to enter in an ETF or something along those lines around these indices, how would you do that, Jace, from here? How would you do that?
Well, with the ASX 200, it could be a case of I think an ASX 200, it depends on what sort of time frame are people looking at. Are they trying to say short term, medium term, long term? If it's long term, it's probably just buy current levels, and the trend's up. So, trying to finesse it for a percent or two probably doesn't make a great deal of sense. From a medium term perspective as well, I think probably buying at current levels is a reasonable play, because it's not like prices aren't stretched above the moving averages at this point. It's not like they've been running week in, week out without any consolidations. We are getting towards 3 weeks of sideways price action. So buying at current levels would be a reasonable play. Sometimes when you try to get too clever and try and say, look, I'm going to buy on a 1% pullback, a little bit of a dip, get a little bit cheaper. Sometimes you're missing. Sometimes markets just move on. So with an index ETF, which I was looking at being in medium term, I think current levels probably still make sense.
All right, it's holding there. It's holding in support, so that's a good sign. All right, let's have a look at the Hong Kong market then, please.
Well, we've got a pullback this week. But remember, prices typically zig and zag their way higher. So I think we're probably just seeing one of those zags back to the 50-day moving average, as we often see. So you got the up, the down, the up, the down. It's that zigzag motion on the way up. The key technical points are that the Hang Seng, it's like we've got those rising moving averages and that long sequence of rising lows. And even if we go back further, we've got this broader sequence of rising lows over the last 18 months or so. So I think it's still a case of siding with the underlying trend. Coming over to China, well, this hasn't gone how I was thinking this was going to go last week. Last week, we'd had this shallow pullback towards support, and I thought the Chinese market was getting ready to have another push to new highs. But it hasn't done that. It's instead we've got this fairly sharp pullback back to the 50-day moving average. And in doing so, prices have broken back below this support, which I've got here. You can see these previous highs, the previous lows. So that seemed like it was a good support, which, well, firstly, it was a resistance point where prices broke higher from, and then it looked like we were going to get a secondary break higher. At least that's what I thought. But as I say, we're now back here at the 50-day moving average. I think this is a key moment for the Chinese market. It really needs to get a foothold, I think, around this 50-day moving average to keep the near-term bullishness alive. A break, I think, if we saw prices, so prices are up here at the moment around 13,800. If prices were to come back down, break last week's lows, well, then it really puts things back in the middle of this big range they've been in since last October. And then that's probably just a sign of more of ongoing consolidation. So I'm still long this market. I bought an ETF position as prices were breaking higher about a week and a half ago. I'm still hanging on to that. But I think if prices were to break back down and get below those lows from last week, I'd probably just close it out and move off and do other things for the time being. It's like I want to be on the side of momentum, and I was going with an upward break. But if that momentum can't be sustained, my reason for being there is probably no longer valid. So that's where, and it's okay. It's okay to be wrong. It's like people get so hung up about I've got to be right. I've got to have a high win rate. It's not about being right. It's about making money. And if something's not working, it's usually a good thing to just step away and say, hey, it's not working, take a small loss, move on, do something else, maybe come back and look at it later on. So if this trend doesn't start to unfold to the upside fairly soon, I probably won't be too patient with it. I'm patient with my winners, not so patient with things which aren't playing out as I think they should.
Okay, fantastic. Good example of something that's not playing out, which is great. Hopefully it does play out for you though, Jason. Okay, let's have a look at the question. We've got a question here from a viewer, Michael. I'll read it out to provide you context. I'll read out the whole sort of paragraph and question around it. Could you please ask Jason, that's what I'm doing right now, in today's webinar, to comment on my observation of the stock market. I notice a lot of people are trying to buy so-called turnaround stocks, but those stocks have been going down for a long periods of time, and there are lots of losers to clear out. Even if they are going up from lower levels, there are going to be lots of resistance on the way back. There's going to be lots of resistance on the way back. Why not just focus on the stocks making all-time highs instead?
Yeah, look, I think that's a pretty good observation. It's like, well, let's get an example. I'll pick a stock which I know has been in decline for a while. PLS, Pilbara Minerals, and I think you might just take that little channel off that was there from another time. Doesn't particularly help us now. Yeah, I think, and we know people have been trying to buy this the whole way down because we often hear about it on this show. I've been hearing about it as we do these segments. One of the stocks which regularly has come up over the last year or so. And this often happens in a stock which has had a mighty boom or a great uptrend. It's people see the uptrend and they get the pullback and they're conditioned to buying the dip, and that what comes down should go back up, and looking for an encore performance from a great trend. But sometimes that happens. Many times it doesn't, and people get caught buying all the way down. As our viewer said, trying to pick a turnaround, and a lot of these people, they buy and they don't have an exit strategy. So excuse me, they don't have an exit strategy, so they get it wrong and they keep holding on the way down. And then the thinking our viewer is saying is that as soon as you get a bounce, then people who had bought, and this is what a lot of people will do, they say, look, if I get back to break even, I'll sell. So say someone's tried to buy this, they're thinking in March this year, Let's try and buy. It's had a couple of up days. Maybe this is a turnaround. I'm going to buy here. I'm going to buy here at $2, and then the price takes a turn, and they don't sell because a lot of people hold on to their losses. And I say, look, this is terrible, but if I can get back to evens, then I'll sell. And now look at this. The price is almost back to $2. So someone who's bought at $2 in March now starts to unload at $2 and get out at even. That's the theory of what our viewer's saying. And that's all the psychological aspects of trading. People want to get out at even, and they'll hang on to a losing stock but say, I'll get out at even. Wrong way to look at it. Take a small loss when you're wrong. And as I was just talking about the Chinese ETF, but when you're right and something starts running, well, then hold on. But it's not what a lot of people do. So then the question is, well, rather than trying to pick a turnaround in PLS, why not just buy stocks which are hitting new highs like PLS was in 2021, 2022? That's classic trend trading, buying stocks which are hitting new highs. I've got no problem with doing that, hitting a 12-month high, hitting a 6-month high, hitting a 2-year high, whatever it might be. If it's hitting a high, there's near-term momentum. I think that's a better strategy than trying to pick these stocks up on maybe a day or two of strength, trying to get a turning point, because you can see all these potential turning points have turned to dust and the stocks kept falling. And yes, there's look, but then the other thing is, like, bombed out stocks, once they also can be good turnaround points at some point. I think the key is waiting for things like these medium-term moving averages to cross. So, like, rather than getting in at every sign of a green shoot, wait for something to grow. And that's, for me, that's waiting for the 50 and 100-day moving averages to cross. So all these little rebounds, which were quite meaningful, like that's, if you got the low and you sold at the high, which almost nobody does, that's a 46% gain. So they're sizable bounces, but they're not enough to turn the moving averages, so the trend remains down. So going back, like, we could use that theory, why buy a stock, why try and get a turnaround? Because a turnaround can be worthwhile at some point when prices switch from below the moving averages to above. They establish themselves above the moving averages. The moving averages cross, prices break higher again. That's when the momentum's swinging. And yes, there could still be sellers from earlier time who want to get out, but the tidal flow of buying interest has often shifted, and that will clean out those sellers from who are trapped from earlier times, and the big trend can emerge. So that's why we want to look at bombed out stocks sometimes, but only when the conditions are right, when the structure changes, not when the price is falling or when you get a 2 or 3 day bounce, but when you get that structural change from below the averages to above, and then the momentum of new buying, as I say, can clean out many months of trapped buyers who just want to get out at even. So it's a good question, and hopefully just talking through that put some perspective around it.
Yeah, definitely a good question. And of course, you may have your own strategy to be buying on the way down, right? I mean, there's no right or wrong. It's just that's not what we kind of do or advocate on this show. It's more around trying to catch momentum and trending, right? Whenever I think of people now that I look at this buying on the way down or averaging in on the way down, all I think of, and I'm not sure if it relates, but I'm pretty sure it does, is trying to catch that falling knife, Jason. So that's all I think of now, and that probably keeps me out of a lot of these stocks that I think are going to be turnarounds on the way down, right? Well, I don't really look at them anymore, but they just exit my watch list pretty quick now. So yeah.
Look, the value fundamental players will buy on the way down. That's what they do. They look for value, and so it's like, and that can work. There are many highly successful value players who buy on the way down. But you've got to think through, what's your strategy if you're wrong, and do you have an exit plan, or is it just, well, I'm right and the market's going to see it my way at some point? I think that's dangerous. It's by all means play value if that's what you do. It's not what I do. I prefer to play momentum. there's a famed value investor, a guy called Jeremy Grantham, and he has got a really good phrase which I like. He says he calls he talks about the curse of the value investor, and the curse of the value investor is that they're often too early. So they might see great value in a stock, but the stock could continue falling for many months, or it might take many months or even years for a turnaround to develop. That's the curse. They're early. They're early to get in, and they're often early to get out, because then on the way up, the value player will say, well, this is no longer value. This is fully priced. It's now getting expensive. I'll take profit. But momentum of a trend can continue much further and take a stock to greater extremes than many people ever imagine. So, so this is a curse which Jeremy speaks about. So it's every strategy's got their thing, which can make things emotionally difficult or just downright hard if you don't have the experience to manage the situations. So it's understand what you do and then stick to your playbook.
Yeah, fantastic. All right, great question, Michael. Thanks for that. We're about to get into the segment now where we can go through all the viewer stocks. Before we do that, don't forget to like, subscribe, comment, get yourself notified every week of the show. I mean, I'm sure you don't forget anyway. Being the greatest technical analysis show on YouTube, where you can come in and engage, right? So, all right, let's get going. As I said in the last couple of weeks, we'll try and get through 2 of each to start off with, of everyone's. I'll have to draw a line in the sand very soon, obviously, where we probably won't be able to handle many more. And then if we've got time, we can try and circle back on the third. But let's go. Let's start off with Lloyd's. He wants us to look at CAA, please.
CAA, Caprol. Yeah, I was looking at this earlier today. It's there's an upward trend in place, and it's just pushing high today, rallying off its moving averages. I'd be holding on to this one if I had it, and yeah, it's just an established uptrend. Generally got rising lows there, and is heading up towards a new multi-year high. It could possibly even be bought at current levels within the stop loss back below the 100-day moving average. Nothing to say can't do a bit of consolidation while the averages catch up and then break higher, or it could continue to push now. It's yeah, one I'd be happy, certainly happy holding.
All right, fantastic. CCV.
Yeah, this trend's accelerated recently, and yeah, I'd be happy in this one. I'd probably be, if I was looking at buying, I'd probably want to see the next consolidation or wait for the next consolidation. Has had a good run. It's gone from 24 cents up to 34 in a pretty quick space of time. So probably I'd probably be keen to wait for some consolidation, let the moving averages catch up. But if I had this, I'd be holding it. I'd have a stop loss way down below the 100-day moving average, giving it lots of room to move around. Because if this turns into a much larger trend, like you can see, it's come from much higher levels. Yeah, give it room to move around. It could pull back, have a meaningful pullback back to the 100-day moving average, and then lift again. So it's an emerging trend, which is looking pretty interesting.
Okay, fantastic. The next one's from Bob. Hi, Bob. Let's have a look at KCN, please.
Yeah, upward trends in play. I'd be happy holding it. Like it's coming out of this large consolidation. What's that? That's 3 years. 3 years of compressed price action. It's had this like the breakout was in May, and it's had a big push following that breakout. I'm just not sure on the timing. If I was looking to establish, like, I'm clear if I had it, I'd want to be holding it. I'm wondering if I was looking to buy it, what would I do here? Has it had enough? Is this what's that? That's less than a month, 1 month consolidation to correct over 100% of price gain. From a time perspective, I would have thought it might need a little bit more. We could see some, of this, some sideways develop, and then from there we might get a secondary breakout. But it's looking strong today. It's up at its highs. So look, I don't think I'd buy it at the moment. I think I'd be inclined to wait if I wasn't in, and see if a broader consolidation develops. But as I say, if I was in it, I'd be happy staying in it.
All right, fantastic. Hi, Yuki. It's NHC for them.
So is there a trend change going on? It's looking encouraging. You can see there's flip from below the averages to above. It's now starting to get established above the moving averages. Moving averages are close to crossing. Maybe it's one of those situations where we do get the sideways consolidation while the moving averages cross. And if that were to happen, then I'd be keen to possibly buy a breakout. I'd then get the rally off the moving averages, and that would be my entry point. So I'd be probably inclined just to hold off and watch a little bit longer. But that said, there's a case for buying it now. If somebody wants to be a little bit more preemptive, stop loss be back. What would you need on this? I think it'd probably only require like a 14% stop, maybe using that low point from early July. So back below the moving averages, below a previous low. So look, it could be bought now, or it could be just watch, see if it consolidates a bit more, then buy the pullback to the averages or buy the breakout. But it'll be interesting to see whether this turnaround does continue to develop.
Fantastic. Hi, Jay Chong. We're looking at MP1 for them. One more as well.
Yeah, trend remains in place. I'd be staying with it. It's just approaching a previous high. Whether that might provide a little bit of near-term resistance, or it might not. I'm just thinking about in terms of buying it. The trend's up. Like buying a stock making a new high, I think it's generally a robust strategy. It possibly could be bought at current levels. Stock probably needs to be back down towards a 100-day moving average. But if I had this one, I'd be letting it run. There's nothing here that suggests to me that I'd want to be taking profit or getting out. It's could it get back to its previous all-time high? I certainly think it could. It doesn't mean that it will, but it means that potential's there. So for that potential, that's why I would stay on board. And I know that probably most of the stocks in my portfolio won't go to where I potentially think they could go, but you only need a portion of them to really run a long way, and that makes that outperforming portfolio. So for me, it's like holding on to stocks like this, seeing how far they go.
Okay, great. VML. V for Victor.
Is that the right one? VML?
VML, yep.
Yeah, look, not much I can say about this one. It's just, it doesn't look like there's much volume there either. It's just not much going on. It's really a down and out stock. To consider this, it would need to show some good upside and get some momentum going. It means like not getting in at the low, but I'd rather forego getting in at a low. Like, who's to say it's not going to continue going sideways, or for that matter, start declining? It's there's not enough here to say this is worth a speculation. Some things I'll say, look, this is worth a spec, but this one here with no momentum, it's I think we're just prone to trouble if we chasing stocks like this.
Okay. All right. Brajesh is always waiting for Tuesdays. Such a help. So thanks for that. We've got D Smith. We want to look at 4661. So it's on the TSE. Different stock exchange.
Not enough yet. This is yeah, I'd rather leave this one alone at the moment. There's the moving averages haven't crossed. We've got this sideways consolidation, so possibly it's setting itself up to push above the averages. But like that said, could it also be like a sideways consolidation, like last year, where things can break lower from? I think that's still a possibility. So I'd be inclined just to leave this one for now and await further potential positive price action before having a closer look at it. If I was in this, I'd also want to be thinking, look, what if this does continue to unravel? And I'm like, where do I get out? I'd be looking at these recent lows. I'd be looking at the low from July and probably maybe also the low from May. So a break of these recent lows would then probably set the stage for a retest and break of maybe the April low, and then that downtrend continues. So not saying that's going to happen, could be turning at the moment, but I think we need a bit more price action before saying, yeah, I think this is worth a go.
Okay, next one is BRK.B. I'm not sure if I typed that one in.
It must be, it's Berkshire.
Oh, yeah. Is there a .B? Oh, yeah, .B.
Yep. Yeah, there's a B class and an A class.
Mm-hmm. Oh, on the way down.
So who's going to get bearish on Warren? Probably no one. So look, I just put it on a weekly chart. It's like, who's going to bet against that? It's on the weekly chart. It's a big clear uptrend. It's pulled back to the just below the 50 week moving average, above the 100 week moving average. We can see this periodically happen. It's going to even spend some time below, but there hasn't actually been since this chart starts in 86. It hasn't really been what you'd call an ongoing bear market where you just see the price go lower for several years. It's been this big uptrend. Going back to the daily chart. So on the daily chart, we do have some lows. Moving averages have crossed. It's swung to the downside. So this probably just looking at the chart on its own merit, this isn't where I'd want to buy. I'd rather buy as the price stabilizes and starts to turn back above its moving averages. So even though it's the Great Warren, it's not to say that it can't lose momentum for a period of time and just not be within an active uptrend. So from that perspective, I don't think there's a need to rush out and buy it today. If I was holding it, looking at that weekly chart, people who hold this sort of stock are probably there for the long term. So it's not really a sell signal either. It's just it's one of those pullbacks within the broader trend. So if I owned it, I'd be holding it. And if I didn't own it, probably wouldn't be buying it today. Let it stabilize, turn higher, and then think about it. Think about it as breaking upwards after some consolidation. That's probably the way I'd play it.
Okay, fantastic. Thanks for that. Surely Warren, so going against the Great Warren, surely he has a team now, no? In his office doing the work. It's not just all him.
So I missed that, Rog.
So surely he has a team that does the work for him now. It's not just all him still, is it?
Yeah. Well, one would think so. And just like looking at this price action here, like this just caught my eye over here from June 2022. So we're at the equivalent point of just where the cursor is now. So you had the initial move, a rebound to the moving averages, then the secondary break. There's the initial fall, the rebound, and there's a secondary break. So it's not to say that something that goes. Well, how long did that last? That lasts went from June through to October. So it's not to say it's going to look like this, but just to give an example of like why I wouldn't rush out to buy it today. It's because it's near term, it's structurally weak, and it could lead to a multi-month consolidation. So that's why I say probably not a hurry to do anything today, but longer term, it's proven itself over and over.
All right, thank you. Thanks, Stackers. He's enjoying the work, so thanks there. Let's get on to Shalendras. Sorry if I haven't pronounced that correctly, but it's DRO, our favourite for the last few weeks.
DRO. So let's see what's happened to that. It's because it's been bouncing around a bit lately, been volatile. New highs. How about that? New all-time highs. So interesting. We spoke about the building blocks of a new uptrend back in. We were looking at this back in March and into May, and well, this has surprised me. Like that, it's taken off and exceeded what looked like a high that was going to hold for a long time. Yeah, and it's making new all-time highs now. So this is what I was saying earlier about when we're talking about the curse of the value investor. Like the value play will say it's gone too far, I'm going to take profits now. But this is just to show that extraordinary things can happen. They don't always happen. They often don't happen. But this is why I don't like jumping off an uptrend. I like to let the uptrend do what it's going to do, because some of them can do some extraordinary things and do what most people think is not possible. I didn't think this was going to happen, and but had I had it, unfortunately, I don't have a stake. But if I had a stake, I certainly wouldn't have been selling it because prices had a run. It'd be like, okay, they're running, let's see where they go, and so that would be continued to be my play now. The trend's up, see where it goes. It's again, it's an extraordinary gain. So it's up. What's that? 540 odd percent. If I had got in at earlier stages, I'd probably trim some. I might sell a quarter or a third or something, because that's a big gain in a short space of time. It is stretched above the moving averages. I'd probably say, let's just shut down a little bit of volatility, because what was a relatively small position is now just through its sheer gain, percentage gain, has now become quite a meaningful position. So that's probably how I'd approach it. If I had it, I wouldn't be buying it now. It's too far above its moving averages. I don't think it's an asymmetric risk reward, because I think your risk is you've got to have a big stop loss to jump on now. But as I say, I'd be letting it most of that position run.
Okay. This is one of those stocks that I hit my stop loss originally from that previous, obviously, peak. And I thought similar thing could happen with this one. So this stopped me from getting into this stock. Jace, what's your position on getting back into stocks that have stopped you out in the past?
Usually I don't have much of a problem with it. I would have, if I had a signal for Drone Shield, like there was a motion trader signal for it, but it wasn't. I didn't have the signal because my portfolio was set up. It's just how my portfolio works alongside motion trader. I wouldn't have had a problem getting back in, even though I'd made some money, then I got stopped out. And that's okay. I don't mind walking away and then coming back later and having another go. Sometimes if it's a serial loser, I can struggle at times to have another go, and I have avoided a stock in the past, but I shouldn't do that because a stock can what's an example? Is it, just see where I can get the right, I can't remember which commodity it was. It was a commodity that did nothing for years and years, and then became one of the great trends. No, it wouldn't be corn. Could be coca. That must be it. So let me just jump to a weekly chart and see whether. Oh, look, I can't quite find the example I'm after, but it's something like this. Like, look at coca. So it goes back to 1980, and it never exceeded $3.70. So if you look at the chart here, saying, look, do I want to buy it? It's never been this high before. Every time, maybe I'd tried to buy it at previous points up around $3.40. It's always fallen back. I've always lose money when I buy it so high, and then one day it breaks and it goes crazy. So we shouldn't have a negative bias towards the stock because it's let us down in the past, although I know often that we will. I know I certainly have. But I think best to try and keep an open mind, because just because a stock has failed at previous breakouts doesn't mean that will always be the case. And this is a great example of what would have been considered the unbelievable playing out. Drone Shield's another one. So yeah, open mind, go at breakout, see where they take you.
Fantastic, lesson learned. All right, CU6, please.
Yeah, well, this turnaround continues. Like this is one which it's not a motion trader turnaround stock because it started to turn around below the moving averages, but the moving averages have only just crossed in the last week or so. So it's really just getting into the position to create a motion trader signal now, and that's going to happen. We're not going to get the ideal setup every time. Like the ideal setup would have been the moving averages, like faster moving averages on this occasion. So the moving average starting to turn as the price is moving sideways and then getting an earlier breakout. So I'm not on this one, and I'd probably hesitate to buy it now because it has had that strong run already. So it's up 100% or so since late June. So I'd probably now be inclined to wait for the next consolidation, see what it looks like. But if I did get on earlier, if I looked at this, the consolidation and the breakout, and I bought some, great. I'd be staying on, wide trailing stop, the usual stuff there, and seeing where it goes.
All right, fantastic. Stackheads wants us to look at BHP, please.
Well, it's getting interesting. So we're now flipped to the good side of the moving averages. Had that strong initial run, hit resistance. This resistance we've had here for a while, so it was interesting to see this resistance be the point. You can see that's been both a floor and a ceiling for a while. So now we're between resistance at around 42.20 and the moving averages. So do we get a situation where BHP starts to coil up between the two before maybe staging a breakout? Moving averages have crossed and started turning higher only early. It's only in there by a few weeks. This is sort of my bias towards how the price action could develop. I think this could be a turning point for BHP, Rio, and also Fortescue. Looking at what the iron ore price is doing, I think could be what we're seeing. I think it's like a preemptive trade here would be to buy it at current levels and say, okay, look, it's on the right side of the moving averages. Maybe it needs to consolidate some more, but I'm happy to buy it here, and I can put a stop. Just give it a bit of room. Could give it good 10%. Yes, plenty of room just to move about and see whether it can start to break higher. And same with Fortescue, Rio. I think they've all got that potential.
Okay, CSL.
Yeah, we're starting to get well, we might have spoken about this last week, or maybe it was in my Friday strategy session I spoke about, where it's really lifting off this lower. So you can just go back. See, it's been a big range for how many years? Going back to 2020. Two false attempts. Well, one false breakdown and a breakdown which kind of didn't quite get going. Like it's we had this coiling up around the lows, but then it's broken to the top side. So I think it's a case of, can this now move towards the top of its range and then beyond? That's the way I'd now be focused. I'm looking for more upside to develop from this. I like there's been a strong rally off the low, and we've seen this in the past. When there've been strong rallies off the lows, it has tended to continue higher. Just looking at it here, starting to have a bit of a pullback. Moving averages are crossing. Maybe the moving averages just need to catch up a little bit. I guess it could be, now we've got that initial pullback, probably could consider buying it at current levels with where our stop would need to be. Yeah, maybe we're looking at around 7 to 10% for a stop. I don't know there's a high upside trade. Like, could this stock double? It could, but it's such a large cap stock, they're less likely to double. But if it were to get to the top of the range and then break from the range, there could be a lot of upside there. So I think it's worth considering at current levels. But it also could track sideways for a bit or even pull back towards the moving averages. It could fail as well. So it's a little bit more speculative stepping up now, but it's certainly be considered.
Okay. Kirby wants us to look at C79.
Yeah, it continues to build along the moving averages. It's got all the hallmarks of one of those trades that then breaks to the upside and starts rallying. Saying that, I've seen plenty of structures which look fantastic but then just fail and break down. So there's no guarantees with anything. But I think it's got a highly prospective structure. I could consider buying it at current levels, which is a little bit more preemptive, or trying to buy a break above, looking at the last week's high, break above last week's high. I think if last week's high breaks, I think maybe then it really can start to get some upside going, and stoppers back below, probably below the late June low. It'll be an interesting one to see whether it can get that upside acceleration.
All right, fantastic. Let's get onto the Hong Kong market here. We've got Sydney with 388. Hi, Sydney.
Oh, sorry, what was that?
388 on the Hong Kong market.
Yeah, trends up, pull back to the 50-day moving average. Looks a bit like the Hang Seng itself. It's price action, and it's linked to it's a exchange clearing. So it's I'd be happy staying in this stock. It's like, do you want to buy this dip back to the moving average? It's like that's been worked in the past. I'd probably be inclined just to watch and just see how it consolidates, see if we get a little bit of sideways consolidation, then maybe buy a break to a new high, or if we get sideways consolidation and start seeing a bit of a base develop, maybe buying it then. But if I was in it, I'd be happy staying in.
Okay, the next one is 9988.
It's coiling up. So got our high, our low, a lower high, a higher low, a lower high. So it's coiling. If I happened to buy some earlier on and I was still holding it, great. I'd be continuing to hold it. Probably a break below the July low would be a negative signal, and that would say be making new lows, moving averages be turning. I'd probably be looking to close it out at that point. But for now, I'd have a bullish bias on it. A little bit more speculative, buying it at current levels, but it could be considered at current levels because we can manage our stop. It's all about where's the risk point, and I think that low from late July, putting say like a 15% stop on it, buy at current levels, 15% stop. Where could this one run? It could run a long way if this broad upward stepping sequence continues. So I think this is worth consideration.
Okay, Brijesh, we've already looked at CU6. Just go back a little bit. Let's have a look at Hassan's EUR, please.
Yeah, it's is there an emerging trend underway? And this is a general consideration for lithium stocks broadly. Early signs of an emerging trend. Yeah, if I had some of this, particularly at these lower levels, and I was in profit, I'd certainly be hanging on. If I bought at the high, I'd be thinking, well, how much more am I going to give this pullback? Probably just to below the 100-day moving average. I probably wouldn't buy it at the moment because it is a fairly steep pullback. I want to see it get a footing. If it can get its footing above the moving averages, stabilize, and then start to turn higher, that could be the point for for new money. But at this stage, if I had some from a little bit lower, yep, let's hang on, see what happens. But probably not a buyer today. I want to see it stabilize. And then maybe we do get this sequence of rising lows starts to develop. So it certainly has potential to be an emerging trend.
Okay, we've got John here. We want to look at ION, ION.
Yeah, it's a low price stock with some momentum. So yeah, I'd give the upward momentum the benefit of the doubt here. Particularly if I'm in early, if I'm getting this initial uplift, I'm happy to be in it. If I bought at the highs, this is why I don't like buying these low price ones, particularly at highs when they're stretched above the moving averages, because they often do pull back to the moving averages, and that can be a significant percentage decline. I'd just like we're talking about with EUR, the lithium play. In terms of buying, I'd like to see it stabilize on the moving average, around the 50-day moving average, and then start to push higher. So go with some momentum. So if I'm in at lower levels, great. Let's see where it goes. If I'm not in, I'm thinking about it. See if it stabilizes, then maybe buy a break. But they're tricky. These low price ones. They can have these good initial gains, but most of them don't go from 3 cents to ultimately $3. Some do, but you just got to be. And they're also a case like if you get a big quick gain in some of these low price stocks, I think these are the situations where I would very much be inclined to sell a third, sell a half, sell a quarter, or sell some portion of it and lock in a partial profit, because it's a lot of these trends, they go up and they quickly come down. So that's probably something to keep in mind with how to manage these positions.
Okay. Hi, JG. We're looking at WTM for him.
WTM?
Yep.
Well, that's taken off, and it's off the moving average. So this is sort of price action. I was saying I would have been looking for on those last two stocks. I've had that big rally, come back to the moving average, but then I was saying, let's see whether prices can stabilize on the moving average and get a foothold, and then consider getting in. That's the sort of approach that could have been taken here, and that's the sort of price action I look for. So when something quickly comes back to the moving average, it's like, okay, let's see whether it can stabilize around the averages, and then this one did, and then that creates your platform where you can buy from with a stop beneath it. So of course this one's now run, and it's now too far above the averages for me to consider buying it, because I think, well, where am I going to put my stop? It's going to be back down here somewhere. It's probably going to be too large. But if I'm already on this one, very happy staying on board and seeing what develops. See if this turns into something larger. So it's see where the breakout to new highs takes us.
Okay, MTH.
Yeah, interesting play. It's trading along the moving averages at the moment. like what's going to happen with the silver price, and of course, like that probably largely determines what happens here. I guess it could be like if I'm in this one, I'm happy to hold it. If I'm thinking of buying, it probably could be bought now, but it's speculative because we're preempting. It's within a range. It hasn't broken from the range. Nothing to say it can't, come down and test the bottom of the range. It's like buying at current levels is probably like looking at I think it'd probably need like a 22 to 25% stop, a bit of room below the July low, because we could see like you could get more sideways, and then from there could get a breakout. So that's why I'd have the stop list a little bit below the July low, just in case there's a flush out of stops. That's typically like people put stops just below a low, so you go just below the low plus a little bit more to hopefully like see off a rate of stops, and then maybe you get that sideways and you get a breakout. So but of course it could also fail and then the share price comes away, so that's the risk of preempting. Alternatively, buy a break above the high from I think it must be last week, and then it could be a case of from below the averages to above, consolidated along, breakout and trend. So certainly a stock to think about if you like if you like this segment of the market.
Okay. We've got Kay. Can we have a look at Bud, please? The stock dropped some 15% after the earnings report. I'm wondering whether to sell. Bud, BUD.
Yeah, it was a nice trend, nice developing trend. Hadn't been going for too long, but it was doing all the right things. It was above the moving averages, moving higher, rising lows, all that. Pull back to the averages, look, nothing untoward, and then you get a surprise gap lower, and that's going to happen. It's like, this is why I often talk about many relatively small trades, not a few big ones. So when you do get these moves, they're frustrating, but they don't do too much damage to a larger portfolio. What to do with it now? Like, the risk is that it's like this this situation from 2018, where you have a nice developing uptrend, then you get a gap lower, and that turns into something larger. Look, this is a COVID sell-off, so it's completely. But it just shows how price action can evolve. Gaps down usually aren't bullish signs, although that said, it doesn't guarantee it's going to continue to decline. Well, firstly, like where it depends. Where does someone get in? Have they been holding this for years and they're in at lower levels, or have they bought up near the highs, or buying a breakout above these recent highs? If I was buying the breakout to above recent highs, I'd probably be closing it out, saying, look, I bought the breakout thinking there's upward momentum. It's now broken lower. It's not working. I'll just close it out and move on. There could also be another potential plays. Maybe there's a rebound back towards the moving averages. Like you get the initial sell, and it could, like if you get a grinding rally where it starts to get back towards the moving averages, and moving averages keep coming down, there could be an opportunity to sell the rebound and lessen the loss a little bit. But I certainly wouldn't be buying the dip, and I'd be looking at it probably with an exit strategy in mind, because it's not doing what it should be doing. It should be having relatively shallow pullbacks, not these gaps lower. So it does, and it hasn't been a stock which has been trending for a number of years. So it doesn't look like it's about to start trending now.
Mm-hmm. All right, Devender, CNB, please.
I've got some of this, and it's been a bit disappointing. It's had a nice structure. Went from below the average to above. We had this consolidation. The dips look like they were being bought. Started to get a bit of a breakaway, and then it's come all the way back to the moving averages. So it's not to say it can't perform from here. It could, maybe it's made us low and it's going to start working its way higher. So I'm still holding it, and it's still comfortably above its stop loss. So I'll hang on. I'll hang on for now. I wouldn't be buying it at the moment. For now, it's had this. Like it's given back. It's given back all of those gains from the late June. Since it's given all those back, I now need to see it consolidate, develop a bit of a platform, and then start to rally off there to consider buying it if I weren't already in, which I am. So for now, it's a hold for me. But I think for most other people, it'd probably be just just watch and wait, see if it can stabilize, see if it can start breaking higher before considering getting in. And many of these breakouts that we play won't work. That's people think, oh look, this breakout strategy stuff doesn't work. He's shown us a few breakouts and they've failed. So this strategy is not too good. It's like a lot of breakouts do fail. That's not a problem because we can minimize our losses by having an exit strategy. So it's like not all value plays work. Some stocks look like they're great value, but they continue falling and they ultimately go out of business. Look, it's Star Entertainment. It hasn't gone out of business at this point, but it's probably been considered a value play for a long time and it's continued to fall. So not all value plays work out, like not all breakouts work out. But if we can lose a little when they don't work, but when they do work, we let them keep running like a Drone Shield or some of those other stocks which really extend higher, that's where you can make a lot of money. So it's having that consistent process around what to do when it's not working, what to do when it is working. And that's how it works. Not about getting everyone right.
All right, ACHR, please. Must be that top one.
Looks like it's still consolidating. Like this is a strong rally, and now we've had this consolidation. It's a sideways range, really. You can just see it's range bound. If I bought this at lower levels, I'm happy to keep holding it. Like it could even be considered a buy at current levels, just with a close stop. Like look at where it currently is, and just think about that range I just drew. Like it's still about 15% away because you've got to give it you look at the lower end of the range and then have a stop a bit below that. So where's current levels? So yeah, it probably still needs a 15% stop if buying at current levels. But then the upside, well, it's like the top of the range, break from the top of the range, and then it's almost up 50%. So it's an asymmetric play if it gets going. It's worth considering maybe a speculative buy on it because it does seem to have that broader momentum. So strong rally, a correction, strong rally, a correction. Is it going to continue that overall sequence upwards? Maybe worth a punt.
Okay, fantastic. The next one's from Irfan, which is ATX, please. Buy, hold, or sell?
Depends where you got in. At the moment, I'd say if I was, it's a hard one. Like I wouldn't have, just looking at the moving averages, like it gapped higher before the averages have crossed. It's just a hard one. I wouldn't buy it at this point. I want to see, we've talked about this in recent stocks, see if it can get a foothold, stabilize, and then start to rally. That would be when I'd consider buying. If by chance I was in from these lower levels, which I wouldn't have been, but if I were, I'd be holding because it's still above the 50-day moving average. It's a big pullback, but it was, it's gone from like 6 cents to 42 cents. And again, this is why we talk about sometimes in these lower price stocks, when they're up north of 400%, like this one got up 650%. When they're up, say, north of 400%, think about like just taking a bit off the top and locking something in, because they tend to be volatile. They don't continue to go up at that rate. It's at some point they had the steep pullback, which this one's now having. If I bought it up at the highs, which I wouldn't have because it was so stretched above the average, I'd probably have to be selling. Stop loss would take me out. But that's why we don't buy stretched accelerations, because they're prone to those big pullbacks. So look, in at good levels, I'd be hanging on. It's above the 100-day moving average. See whether something amazing happens. But I'd also would have been considering that strategy of just taking a bit off the table as well. And we've got to see how this consolidation plays out now. Get some more price action to help us understand what might happen next.
Okay, next one's IPX, please.
Wrong one. Looked like it was the same stock. It's just a US listing, but this is the local listing of it. Upward trends in place. Sequence of those rising lows, making new highs recently. If I was in this one, I'd be staying in it. Probably not buying it at current levels. It is just a bit elevated above the moving average. Maybe if we got some sideways price action while the moving average is caught up, then it could be another buy, like a bit like what we saw in during June. Got a bit above the averages and had spent a couple of months going sideways before breaking out again. Maybe something similar, sideways and then another breakout. That would be a point where I could consider an entry. But for now, I'd be happy hanging on. Wide trailing stop back to at least below the 50-day moving average, preferably below the 100.
Fantastic, good one there. Fred wants us to look at AUE, please.
Yeah, nice. Nice rally, consolidating on the moving averages, just below an earlier high. Nice structure. Let's see whether it can break to the top side. Speculative buy, maybe at current levels, probably do that with maybe like an 11%, 11 to 12% stop. It's preemptive, so when preemptive buys are probably more likely to fail, because you're buying in the neutral. There's no underlying momentum at the moment, so I think the odds favour the upside break, because that was the previous direction. So we've got a strong rally and then a consolidation that's holding on to most of the previous gains. So that's generally what I'd look at as being bullish. It looks like there's buying at the dip, but never a guarantee. Can always fail. So probably 12% of risk. But if it breaks higher and runs, it could it double? Yep, it could double. You never know. But that's what we talk about with trends. You never know how far they could go. But certainly an interesting play. I'd be hanging on if I'd bought some a little bit earlier.
Okay, SEQ from Kyle.
Downtrend, isn't it? It's like we were talking about just now with consolidations. You get these consolidations, you never quite know which way they're going to break. But when they break, there's often follow through in that direction, and that certainly proved the case with this stock. Just wondering whether this would have triggered a motion trader signal at some point. I don't think it did. I'm looking like how the highs were structured during that consolidation. So the moving average is crossed, but I don't think this became a motion trader signal early in the year, just from what I can tell from that quick glance. So the way the motion trader signal will work, it'll be like the moving averages need to cross, and then the stock needs to hit a 70-day high, with this close up at a 70-day high. So I was just looking where the closes were, and so I don't think the close rule at a 70-day high triggered an entry. So even if it had, the stop loss would have gone off. So it's not a stock that I'd be in. It's not a stock that motion traders in. And if it's a stock that I was caught in, say I had bought this breakout, If I hadn't been stopped out in that previous sell-off during April, I'd be looking at it now going, this is just not working. Now it's gapped down. Well, it's not gapped down, but it's had a hard sell-off again. It's had a rebound. I think the rebound would be where I'd be saying, I'll just salvage what I can in the rebound and exit. It's just an ugly downtrend, a volatile downtrend. It's not to say that it's not going to base at some point and go back higher, but the path of least resistance, unfortunately, remains to the downtrend, remains to the downside. One to avoid, unfortunately, from my perspective.
Okay, from Reese, we've got LTR.
Yes, I've got a few of these. I speculatively bought some a bit higher. We had the breakout, and so I got some. I think I got some on the pullback. So we had the initial run. I bought some into the pullback, but it's continued to pull back further. So you can see this line I've got. That's sort of like my line in the sand. Breaks below 77. A little bit of room under that, and then I say, look, this isn't working for now, and I'll move it on. I don't like how quickly it's fallen back. I don't like when you get these strong rallies, but then you get almost as equally as quick sell-off that gives it all back. So there hasn't been that buying of the dip on the way down, which is probably a red flag. I wouldn't be buying any at the moment. I want to see it stabilize and then start to push higher to consider buying some if I weren't already in there. But being in there from higher levels, I'm not looking at giving it much more room to move. Even if I was in from lower levels, maybe I'd give it a little bit longer. Maybe I'd give it to underneath the 100-day moving average. But it really wants to get a foothold and then get some upward traction soon, or it risks it just risks falling back in on itself. It's nothing to say it can't end up like what we saw in 24, where it looked like there could have been a turnaround happening, then it all just fell in on itself. Something similar back in September 24 rally looked like maybe it was building a platform to break higher from, but broke lower. So I'm not a rusted on lithium supporter. I'm a price action follower, and if this price action doesn't sort itself out soon, I'll head for the exits.
Mm-hmm. Okay, we've got Katie. Oh, sorry, Reese got another one here. LYR, sorry.
LYR, so it must be this US listed. Oh, that's not it. LYR. We don't have an LYR.
Yeah, let's get on to Katie's SNL.
Just double check LYR. I don't have an LYI, so maybe put that one in again.
LYR, that's all right. No, let's have a look at SNL. Katie, please.
SNL?
Yep.
Yeah, I've got some of this. I've had it for a while, and it's been a case of letting profits run, wide trailing stop. That's been working. That's what I'll continue doing. Consolidation at the moment wouldn't be a buy just yet because it's dipped below the moving averages. That's not necessarily an issue because this often happens during a consolidation. But I'd like to see it get back on the good side of the moving averages, hold above the averages, and break higher again before considering a buy if that's what I was doing. But I'm happy just to let this one run. It's I can't remember when I bought it. It was a while back. I don't know. Early last year, perhaps, maybe late 23. It's been my portfolio for a while. And the reason I've had success with this is that I haven't been tempted to take a profit. I've just let the trend do what it does and have that wide trailing stop, which has seen off these periodic pullbacks to the 100-day moving average and sometimes below. That's the secret. The secret to riding big trends for me is to give them plenty of room to move. And that's the part which a lot of people find unnerving, is giving them room to move. But if you don't give them room to move, these pullbacks knock you out, and then it makes it very hard to get that that big move. So it's one of the emotional stress points, I think, in this active investing. It's giving your winning positions room to move about.
Okay, fantastic. WBT, please.
It's a volatile stock, and it's prone to these sharp moves up and down. See it frequently. It is back on the good side of the averages. It's like, so if look, if I was holding some here, I'd give it the benefit of the doubt whilst it's on the correct side of the averages. If I really liked it, I could consider buying some at current levels, possibly. What would our stop be? Yeah, look, 25% stop, buy current levels, 25% stop. As a speculative sort of position, to see whether it does start to go. I'd probably rather see if it consolidated sideways for a bit, got a bit more of a platform going, and then considered it. But there's different ways you can get into a stock, as long as you can manage the risk. As long as the risk is manageable, it can be okay to move ahead a little bit quicker than sometimes I move ahead. But look, we can see whether this time takes it higher in a sustainable way. It's as I say, it's on the correct side of the averages. The averages are crossing, so it does set up the case for a trend to emerge.
Okay. Mr. Leftovers, can we have a look at PXA for them, please?
Was that EXA?
PXA, maybe a bit of a fundamental play for them. Recently shot up after NatWest formally agreed to use PEXA's platform for facilitating remortgages as well as for the sale and purchase of transactions.
So I'm not getting the code, Rog.
PXA?
Oh, PXA. Yes, I know the one. Yeah, that's a nice break higher. And I think this is a motion trader stock. The signal would have been during this period during late June when the moving averages crossed. And it's interesting. Moving averages crossed, but then there was a pullback to the moving averages, and I sometimes hear from people, they say, "Hey, I bought this signal. Moving averages cross, break to a new high, but now it's pulling back. Is the signal not working?" It's like, well, this is why we give stocks room to move, because sometimes the initial momentum needs to be consolidated, and prices do pull back. But now we've got the strong rally off the averages. So there's an upward momentum in play. I'd be hanging on to this one if I had it. I probably wouldn't be buying it at current levels because now we're stretched above the moving averages. But as I say, very happy holding it. Wide trailing stop. See what develops.
Okay, fantastic. David, let's have a look at TTT, having a bounce and then continue uptrend.
Yeah, it really I think it really needs to get a foothold at current levels and get back above those moving averages. There's are these lower lows? Are we developing a sequence of lower lows? That's why I think it really needs to hold around current levels. I don't think I'd be a buyer just here. If I was, I'd be having a tight stop, be like at 24 cents. That's an aggressive strategy, I guess. Buy some at current levels and have like a 5% stop on it or something like that. It's not a play I'd do though. I'd want to see it rally back above the moving averages. If it does break down to 24, it doesn't mean that it's this whole upward trend's over, but it could it could start to come away, or it could be part of a larger consolidation. If I'm in down here at these lower levels, I'm happy to let this run with the wide trailing stop. But from a near-term perspective, I'm not a buyer. It does really need to dig in soon and stop this sequence of lower lows developing in a longer and larger potentially consolidation.
Okay. Neil wants us to look at SOFI. Sophie?
trends up, rising moving averages, price above moving averages. If I'm in at lower levels, I'm happy holding wide trailing stop. Probably not buying because it does look a little bit stretched. Wait for the next consolidation. But yeah, that trend looks to be in place.
Okay, beautiful. GDX from Martin.
We'll look at the US listing. So this is the Gold Miners ETF, and that's breaking to it's like a 13-year high. It's nice sideways consolidation on the moving average. Every time it's back to the average, it rallies off it, rallying off it again. It's being driven by, which is interesting when you look at look at something like Evolution, which has been coming back, and Northern Star doing the same. Those big Aussie ones, they're coming back. Then you look at GDX, it's making a new 13-year high, and that's because it's dominated by stocks like Barrick. And that was Newmont, and that's Barrick. It's dominated by those big cap North American stocks. So I've got some GDX. I've had it for a while. It's a core gold holding. I'm holding it, but I've held it for ages. And this trends up. I think ultimately, just putting it on a weekly chart, I think ultimately it can get back to those old highs from 2011. But that could still take time. I think the trend's up. I'm happy to hold. And also, I was going to say, would I consider buying some at current levels? Like gold's probably gold's still consolidating. Gold hasn't broken out of its range yet, so I guess so. Like if somebody wanted to establish some gold exposure and didn't want to play around with single stocks, this is probably the go-to for broad gold exposure, and it is hitting a new high, it's breaking from a range. I guess it could be considered at current levels.
Okay, all right. Ed got recommended drone shoot at 20 cents from his son. Good tip from his son. I think you need to pay him some of those returns when you cash out, obviously, Ed. Then the next one. Well, let's go two more. LYC. Sorry, we'll do this last one from Reese that we missed from before. LYC. That'll be for today.
And look at this, new highs. It's had a great run. We've looked at this a lot of times over the last year or two. Ended up with a big base being formed, and we had the makings of this trend back in April, but it was a hard one because every time we got a strong rally, we also got a strong retracement back to the moving averages. So it was a difficult one. I remember talking about it I think it was in July, saying, look, I don't want to buy this pullback to the moving averages because it's just been such a volatile experience, and then it takes off, and it's like it's been for me. I've had a couple of goes at getting this like earlier on, and I've found this a difficult one to catch. But I'm sure some people are on it. They're doing well from it. If I was on it, I'd be holding it, letting it run. I had my wide trailing stop back at the 100-day moving average and see where it goes. Like it's making new highs, new all-time highs. I think that would be, let's put it on a weekly to just confirm that. And no, it's not all-time highs. Look at that. That was something. That was in 2011. So barring 2011, it's making new highs. So it's trends in place here. Let's let it run, see what happens. See where it goes.
Fantastic. All right. I think we will wrap it up for today. Thank you, everybody, for your tickers. Thanks for coming along. Once again, this is general advice only, so make sure you do your own research, do your own diligence. We don't know your circumstances, obviously, so make your own decisions there, obviously. Go and check out jason at motiontrader.com.au. It outlines your system for free, basically, if you want to download the reports there. And then, obviously, I work for Self Wealth. So if you're not using this platform, our platform, we can give you 10 free trades. The link below. below, obviously, and you can check us out as well. You can ask me any questions you want as well by just sending an email to the support@selfwealth.com.au, and it'll end up with me as well at some point. Other than that, Jace, thanks for everything. Oh, and don't forget to like, subscribe this show as well. Thanks again for this week, Jace. Much appreciated.
Hey, thanks, Rog. That's been fun. Hopefully it's helped everyone and it's been interesting. And yeah, next week, look forward to doing that.
We'll be back all again next week, and I hope you all will be too. Thanks, everyone. Have a great week ahead. Take care. Bye-bye.